Good afternoon, those of you in the East Coast. Good morning to the rest of you. Hope you're having a great Thursday. We're in the home stretch to Christmas. Next week will probably be a pretty quiet week. But hey, glad you're here. This is the All-Star Options Jam session. So what we do in this session is we review any action in the All-Star Options portfolio, any positions that we've entered, positions we've exited, any stops that we've adjusted, the good, the bad, and the ugly. I don't think there's any ugly this week, so that's good. But before we jump into charts, I have to drop the old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money. Hopefully you learned something from following my process. All right, so let's get into the high level. I always like to start off with the high level overview of where we are in the markets. And the S&P 500 is the broad index that I track most closely. And as you can see, we are right up against all-time highs, a natural spot for perhaps a little pause in the action and the rise. We certainly had a pretty slippery afternoon yesterday that no one really could pinpoint to why that we had that sell-off. Perhaps it was just people taking some profits at a natural level, right? And we gapped higher today, but we're struggling intraday. I mean, as I'm looking at the S&P right now, we're making new intraday lows. So, hey, would totally make sense for the S&P 500 and broader stocks in general to pause here for a little bit. I certainly am not going to say that this is the top and the bull market is over. I think a little healthy consolidation here would be good, setting up for another run over the next few weeks. We'll see. We'll see. Meanwhile, in VIX, yesterday's action certainly gave a little bit of spike to the VIX, but boy, we are making multi-year lows. In fact, we made, I think it was yesterday or maybe the day before, VIX printed the lowest level that it has printed since COVID. That's significant, right? Now, I know a lot of smart guys out there saying, oh, well, when we make new lows in VIX, that's the time to get long volatility. And sure, you can make that bet, but I'm willing to bet the volatility is going to remain relatively low for a little while here. Just because volatility is low does not mean I want to start getting long volatility, making the bet that the market's going to sell off. That's not something that I do or think about. All right, so let's review positions that we exited this week. I don't think we have a whole lot. I think we just have two. Yeah, so the first one was New Oriental Education and Tech Group, ticker EDU. A rare losing trade amongst our bullish bets over the last few weeks. This one just didn't work for us. We got in on December 1st, and as if the market was waiting for us to get in, it immediately gapped down the next day. That should have been our red flag, but it climbed back up and teased us, even printed a new intraday high, a new closing high like a week later. But it was all for naught. The thing gave up the ghost, and it closed below our risk management level. We got out of this trade yesterday. This is a bull call spread that we got into. We paid $6 for it. We were long the April 85 calls and short the 110 calls. And we got out for around $3. I'm checking my notes right now. We got out for $3.55 yesterday. And for just a little review for those who maybe need a reminder or maybe who just don't know, when I have stop loss levels in place, and we'll talk about stops a little bit more in a minute, but when I have a stop loss level in place, I don't have a resting order for my spread or my option contract to get out with a market order. I don't do that. What I want to do is I have a level in mind. In this case with New Oriental Education, EDU, the level was 75. I believe it was 75. Regardless, whatever the level is, I want to see the stock close below that level at the end of the day. I want to see the closing price. I don't care about intraday noise so much, especially when I have a defined risk trade on like this one was. I just want to see a closing price below my risk management level. If it closes below that level and then the following morning it remains below that level, it didn't re-gap higher, If it remains below that level, then I'll look to exit that trade that morning. I'll work an exit. I'll patiently work my exit again because I can do that when I'm in a defined risk trade, right? There's no reason to panic for the exit. So I'll work my order the next morning, and when I get out, I get out, and that's what happened on the 20th. I got out, and like I said, I got out for three. What did I say? There it is. 355 is what we got out. Not so bad. All right, next trade. This one's a winning trade, and boy, our winning trade got us out at the right time. It looks like Steel Dynamics. This is a trade that we've been in since June 12th to be exact. We bought a January 100 130 bull call spread, and man, it just did absolutely nothing for us. In fact, we almost got stopped out back in early September, but we didn't. Our trigger was not hit, but it just languished and just did nothing for us for 4 months. But we patiently stuck to our plan, and we were finally rewarded. We got teased right here about 3 weeks ago. We got within like 20, at least last I saw, we were like 25 cents from my profit target. I wanted to sell this spread for 20 bucks. I paid 10. I wanted to sell it for 20. I think it traded up to like 19.50 at some point here, and I was like, oh man, we rolled over, and I was frustrated that we didn't get hit. But we stuck to our guns, and we got rewarded. We got out on the 15th. What was that? That was Friday. Finally hit our level. We're out of Steel Dynamics at our profit target at 20 bucks. And hey, feeling good about that considering the rollover it's had since then. All right, so those are the only trades we exited this week. Next up are just some positions that we have on that I'm updating our stops on. Datadog, we're in a bull call spread. We're long the July 120 and short the July 150 calls that we paid $9.90 for. Position is slowly working in our direction. It's not getting me super excited yet, but we do have a logical level to raise our stop loss level 2 below this pullback about 3 weeks ago. So 112 is the level I'm leaning against now for stops. And by the way, I'm raising some of the stops here that you'll see over the next couple of charts. I'm being a little bit aggressive in raising these stops only because we've had such a big run in stocks over the last 2.5 months now, or 2 months, that if we have some kind of pullback, it could happen soon, and I don't want to let these things get away from me if that happens. So I'm being a little bit more aggressive on raising my stops. Datadog is one of them. This might be a little bit of an aggressive one, but I feel like if we're below 112, I don't want to be in this trade anyway. So that's where we're at. Autodesk. This is a trade. We're long the June 230 calls and short the 280 calls. That's a bull call spread that we paid 17 bucks for a little while ago. We're raising our stop to 225. You can see here, that's a pretty logical level. 225 acted as resistance for most of the year. We've since broken through that level. So now I'm going to leave that there. That's where our stop now is. If we're back below 225 in Autodesk, that's a bad sign. Probably don't want to be in that spread anymore. So 225 is the new stop in Autodesk. And next up is Adobe. This is a trade. This is an interesting situation. We are long a bullish risk reversal. So we got into this trade back on October 11th. Okay. And we shorted the June 460 puts. So that strike kind of corresponds with this level down here. And we used those proceeds to buy the June 700 calls, which seemed like a long way to go, which it is still a long way to go. But we were able to do that trade for a net $1 credit. So we got $1 more for those puts that we shorted than it cost us to buy the 700 calls, right? So we have a $1 net credit built into the trade already. So if Adobe goes sideways from here, both the puts and the calls will expire worthless, and we'll walk away keeping a $1 credit. Now that's not the trade. That's not the profit we're here for. That's not what we're hoping on having, but it's nice to know that if nothing happens, then at least we walk away with $1 of profit for our effort. But here's the thing. The recent sell-off that we had in Adobe that has found support right around 578, which makes sense, by the way, logical level. That level was resistance during the summer rally at 578. Now that we're above 578, I expect and I would hope that level would act as support. So that is my new stop loss level. But here's the thing, guys. If we do break below 578, as long as it's not a waterfall collapse below 578, it's likely we'll be able to exit this spread for a nice profit. Last I looked at these options, the calls were currently trading, north of $20 a contract, and the puts were trading for less than $8 a contract. So let's say conservatively, if this thing sells off a little bit, let's say we have to sell our calls for $15 and buy our puts back for 10. Hey, then we're walking away with a $6 net profit, right? So I like where we're at. If we break this 578, we'll likely, certainly not a guarantee, anything could happen, but we'll likely be in a position to still profit in this campaign overall. That's a nice place to be. But I'm hoping it doesn't break 578. I hope we just keep rolling higher. And this trade, we are in a position to perhaps enjoy a large win if Adobe goes back and tests these 2021 highs, which I believe are an all-time high, but don't quote me on that. And finally, Cloudflare Inc., ticker NET. We got long calls. Along the June 100 strike calls. We paid $6 for. I'm raising my stop loss to $75 a share. Again, that's kind of the low where it found support during its most recent kind of pullback. And again, some broken record, kind of a logical level of support because that level 75 acted as resistance once again during this past summer's rally. So if we're below 75, I don't want to be in it anymore. I don't feel like the trade is working the way we want it to. So that's our new stop in Cloudflare, ticker NET, 75. All right, guys, that's all I got for you this week. If you have any questions, oh, wait, hold on. No, I'm getting ahead of myself here. 3 new trades we got into since we last spoke. I don't have the trade details here. That's on purpose. You could find all the trade details at allstarcharts.com. Head to the members section, head to the options section. You'll find the blog posts that lay out all the reasons why we got into these trades, the strategy we're employing to participate in these trades, where we take profits, where we stop out, all the details, everything you need to know, all laid out on the website. But just a heads up, since we last spoke, we got into Lululemon on Friday. Stocks making all-time highs. I think you can guess which direction I'm leaning. Southern Copper, ticker SCCO. We like this setup here. We think this is set up for a big move, so we're in SCCO. And yesterday we got into Wells Fargo. We think Wells Fargo could be one of those banks that plays a catch-up. Banking sector is one of those sectors that we really want to get more exposure to. So we are in Wells Fargo, ticker WFC. Like I said, you can always find all the details on the website. If you don't have access to All-Star options, well, send us an email, info@allstarcharts.com. We'll get you hooked up. We'd love to have you in the community. We also have a live chat room where all of our members can interact with me, can interact with each other, talk about the trades we have on, ask questions, et cetera, et cetera. All right, everybody. Next time I talk to you, it'll be after Christmas. So Merry Christmas to those of you who celebrate. Happy Festivus. I celebrate Festivus. Happy everything. But we'll talk before the new year. Until then, have a great weekend. Have a great holiday. And we'll see you next week. Bye-bye.